Hi guys, welcome to 402 Trading. If this is first time you have landed on my page, and on this video there are greater chances that you're looking some answers about PDT rule. We will be discussing everything about PDT rule in this video, but please I would request you to subscribe to my channel and also hit the like button. And if you want to get notification for my future content, please do hit the notification bell icon so that you get notification for my future content. We'll be walking you through to PDT rule and what it is and how to avoid PDT rule. What if you break PDT rule? What's going to happen if you break PDT rule? So let's get to it straight away and answer some questions. Okay. This is what we will be discussing. What is PDT rule? We'll be defining what PDT rule is. Also, we'll be talking about what if you somehow break PDT rule and what is going to happen then in that case. Also, how to avoid PDT rule. If you don't have enough money to go under PDT rule, how you can basically avoid PDT rule. Okay, so what PDT rule is. Basically, FINRA introduced this regulation where they require day traders who have margin account to maintain minimum $25,000 equity in their account. If it falls below 25,000, the PDT rule will apply on you. This rule was introduced to discourage retail traders to trade excessively, over trading, which we know with newbies and small accounts this has been an issue, and it will always be an issue, over trading with FOMO and other things, whatever the reason may be. There is over trading habits among traders, retail traders especially. So what it requires is, if your equity falls below $25,000, it only allows, your brokerage is basically forced to enforce the PDT rule. And PDT rule is you are only allowed to take 3 trades in consecutive 5-day period. So you cannot take more than 3 trades. One trade is considered to be buy and sell, or sell short and cover your position. So one round trip is considered as a trade, and if you buy and sell on the same day or sell short and cover your position on the same day, it is considered as trade, and you're only allowed 3 times in 5 consecutive days in any trading week. Okay, moving to next point. Why PDT rule? PDT rule is not bad actually. It's not there to scare traders, but to protect traders, especially small accounts. We know from statistics that small accounts get wiped out mostly with those brokerage accounts who are not regulated by FINRA or SEC, and those accounts are mostly offshores, and we'll be talking about them later in this video. So it is not a bad thing. It is good for small accounts to have PDT rule, and it saves you from falling into financial destruction and getting wiped out completely from trading. What happens if you break PDT rule? Let's say your account equity has dropped below $25,000 and you have traded more than 3 times, 4, 5, 6 or 10 times, whatever that may be. And it only applies on margin accounts. Cash accounts are not under PDT rule. If it falls below $25,000, you will get a call. Usually most brokers now don't make a call, but it's called margin call. They will send you an email or a message or an alert in your trading platform saying that please bring your account to minimum requirement of PDT rule, which is $25,000. If you ignore that message and don't bring your account above $25,000 equity, then your brokerage can block your account for 90 days. That is the drawback. How to avoid PDT rule? If you don't have $25,000 to trade with, and you have a small account, maybe $5,000, $10,000, or any figure below $25,000, there are 4 ways you can still day trade and come around more than 3 times actually in a week, in 5 consecutive days. Number 1 is cash accounts. We'll be discussing all these points in detail later in the video. Stay tuned and make sure you watch the video till the end, and I'm sure you will have some clarity on PDT rule if you have watched the video till the end. Number 1, cash account. Number 2, multiple margin accounts with different brokers. Number 3 is open an account with a foreign broker, offshore broker who is not registered in US, because PDT rule is only for the brokers who are in US. Any broker who is not in US, PDT rule does not apply on them. Or the 4th option you have is swing trade overnight, buy today, sell tomorrow, or the day after tomorrow, which is the safest way for trading. Okay, cash accounts. With cash accounts, one drawback you have is your buying power is only what you put in. So let's say you have in your account $10,000, you will be only able to trade with that $10,000. If you have $5,000, you'll be able to only trade with that $5,000. You will not have any leverage, any margin. What you get with margin accounts, where if let's say you have $5,000, your brokerage will allow you to buy up to 4 times your equity. With cash accounts, you can only buy with what you have. So let's say this example on my screen is for $5,000 account size. And if let's say you want to trade more than 3 times in a week, this diagram explains it very well. $1,000 trade is just an example. You can take $2,500 trade on Monday, or 1,000. Let's stick to this example actually. If let's say you have $5,000 in your account and you take a trade, $1,000 trade, you will be left with $4,000 cash in your account. And let's say on that day, on Monday, you make $100. On Tuesday, you come back to $4,000 and you take another trade with $1,000. And now you will be left with $3,000, because from Monday, cash hasn't cleared. Cash clears in your brokerage account transaction day, trade day, plus 2 days. So if you have taken a trade on Monday, your cash will be cleared on Wednesday. Either case, whether you have taken loss or profit, whatever the case is, your cash will be available on 2 days, after 2 days. So you will be left with 3,000, and let's say Tuesday you made $200 profit. So on Monday you made $100, on Tuesday you made $200 profit. So your total profit is now $300. Monday and Tuesday you took trade with $1,000 each day. And on Wednesday you will have equity of $4,100 cash available to trade with, because your Monday trade 1,000 plus your profits of $100 minus all the commissions will be available on Tuesday. So on Wednesday, sorry. And on Wednesday you take another trade with $1,000. Now you are left with $3,100 in your account cash available. Let's say you take loss of $50 on Wednesday. Now coming on Thursday, you will have $100 profit from Monday, $200 profit on Tuesday, and you had cash left on, if you look at here, you have cash left 3,100 from Wednesday. So now you will have this figure here, 4,300 to trade with on Thursday. You take another trade, $1,000 trade, you are left with 3,300. Let's say you make $500 profit on Thursday, that will clear on next Monday. But on Friday, you will have $300 from Monday and Tuesday, minus $50 you took loss on Wednesday. that will leave you with $4,250 cash to trade with on Friday. And your loss of $50 will be obviously your profit of $500 on Thursday will be cleared on Monday. So next Monday you will have all the profits from this week's trading minus all the losses minus all the commission fees if incurred, and the rest of will be available on following Monday, next Monday. Let's move on. This is your cash account and you have freedom. There's no PDT rule. You can trade 5 trades minimum and maximum 10 trades if you go with half. Let's say you take Monday, you take trade with 2,500, Tuesday same, Wednesday, so you can basically take 10 trades in a week using that method. Okay, moving on to next, multiple accounts. Basically what you can do is, let's say you have $5,000, you can open at least two accounts with 2,500 in each account and a margin accounts. Basically that would give you buying power of $10,000 in each account, and you will have, once again, you will have the same method. If you apply just this method, six trades you will get in a week, and plus you will have buying power of 4x. In some cases, some brokerage allow up to 6 hours of 6 times your equity. The third option you have is foreign brokers. Basically, PDT rule is only for the brokers who are registered and based in US. Any foreign broker is not to enforce PDT rule. So that gives you flexibility to open an account with a broker who is not based in US. 2 brokers who I would recommend, and one is my favorite, CM Elite Group and Trade Zero. I prefer Trade Zero, reason being the market hours are full market hours. They allow you to trade pre-market, market open, regular market hours, and also after hours. So they start from 4 a.m. and they allow you up to 8 p.m. in the evening. Both of them allow up to 6 times margin. Please use your margin wisely and responsibly. Usually my formula, if I have to use margin account, I would highly recommend that don't use borrowed money from your broker. Only trade with your own money, whether if you are using margin account. But if you have to use margin from your broker, my formula is simply my equity times 1.5. So let's say my equity is $10,000. So I will not take trades more than $15,000. That's how I protect my account. The bigger the position size you take with margin accounts, the higher the risk is you will be wiped out. So for example, let's say you have used your entire margin availability. Let's say you have used 4 times. So you had $5,000 and you used $20,000 to take a trade. That trade only has to drop 25% for your account to be wiped out completely. So let's say 20,000, if that trade falls 25%, you are incurring $5,000 loss on that account, on that trade. That means that's your equity, and once that happens, that's it, your account is wiped out, and your brokerage will basically force sell the position. They will liquidate the position without even you knowing it, and that's it, you're done and dusted. That's how most of the small accounts get wiped out. Back to overnight. So this is my favorite strategy. If you have to trade, do swing trades, buy today, sell tomorrow or the day after tomorrow. Yes, it requires a lot of research because it does not just depend on fundamentals, technical analysis. It also depends on fundamentals. So basically you will be doing fundamental research on a company and also the technical analysis. So you will depend on both analysis, not just technical analysis. With day trades, you only look at the chart. You don't give a shit about, about bad language. You don't give a crap about the company itself. You only look at the chart, what chart tells you. You make decision based on the chart. But with swing trades, you consider the fundamentals of the company and also the technicals on the chart. Few tips: don't overtrade, never ever overtrade. Your position size matters. Take only where you can chew. Take only quality setups. It takes time to find them, but once you find them, they are worthwhile. And never ever turn your losing trade, day trade, into a swing trade. That is the worst thing to happen. And that was it, guys, and I hope you liked the video. And if you did, if this helped you in any way, please hit the subscribe button and also hit the bell icon so you get the notification for my future content. I would appreciate your support on this. And if you have any question, any feedback, please do leave it in comment, and I will be personally responding to all the comments left in the chat. Thank you very much. You take care, guys.